Well, hello. I hope all of you are doing in good health, and that's the wishes from my side to all of you. Have you started investing? I'm sure you have. And many of us would be investing in mutual funds. Well, in mutual funds, when we are investing, we need to take care of certain very keen areas. I'm going to speak specifically today of two of them, and in my next video, I'm going to follow up with two more. So, well, when you start with mutual funds, obviously you need to understand there are two types. One are going to be totally equity oriented, a little bit of debt in it, and the next ones are going to be the ones which are pure debt, which are parking your money into a fixed income investment avenue. Well, when you're talking about equity mutual funds, you need to understand there are multiple different types of investments which can be done in equity. Well, and you have the large cap, the mid cap, the small cap, and the multi caps. Large cap, mid cap, small cap, and multi caps are different type of companies in respect to their market capitalization, where the fund invests your money in. If you are a very high risk taker and are able to take volatility, you can go ahead and park your money into mid caps and small caps, which means there is going to be a little bit of uncertainty in the returns which you might earn at the end of every year. But if you're consistently investing for a long period of time, 5 to 7 years plus, you're going to get good returns. But volatility is going to be your baby for that. If you don't want too much of volatility in returns, a little bit of more consistency, going for large cap funds, which will give you returns which are not as high as mid and small cap in the long run, but give you good consistent returns over a period of time. Then there is something which is known as hybrid. Hybrid is a mix of debt and equity. There are balance advantage funds which you can park your money in, or balance funds which you can park your money in, which is a mix of equity and debt. They are less riskier because they have got debt in it. When I say less riskier, it means in comparison with your other funds which are large, mid, and small caps. Which means you can go ahead and invest and not have too much of volatility in your investment. There are multi-cap funds also. Well, multi-cap funds are funds which invest in large, mid, and small, all three altogether. There, the fund manager or the professional who's managing your money consistently keeps a percentage in certain set of market cap companies, which means over a period of time he decides which company he feels is going to do well, and accordingly does and takes his call. So, if you're going ahead and investing in mutual funds, keep these two things very clearly in mind. And the next video is going to talk about the funds itself and the kind of returns and parameters which you should look at while investing. Thank you so much and happy investing. Take care.